They called me insane for buying stocks at all-time highs. Everyone screams, buy the dip, buy the dip. But what if I told you that buying at the peak could have turned 18,800 euros into over 323,000 in just 12 years? And I'm talking about 1600% return. I'm an ex-financial advisor who helped allocate over 10 million euros in assets across Europe. I built my own six-figure portfolio, which you can see right here, yielding 25% annually in just 3 years. And now I create content on YouTube, no consultations, no sales, just pure value. And here's the shocking fact. 92% of investors sell when stocks hit all-time highs. But historical data proves that's exactly when you should be buying. Your problem is simple. You're waiting for the perfect dip that never comes while missing massive gains. And today, I'll show you exactly how this counterintuitive strategy works. Welcome back to Psycho Investor, where we challenge everything you think you know about making money in the markets. 3 years ago, I started building my personal portfolio using unconventional strategies. Today, it's worth 6 figures and generates 25% annual returns. You can find it with the link in the description, by the way. I don't sell courses. I don't offer consultations. I just share what actually works. And today, I'm revealing a back-tested strategy that would have transformed 100 euros invested at every all-time high into a fortune. We analyzed 12 years of real market data using actual euro prices from European exchanges, and the results will shock you. Everyone on YouTube, Twitter, Reddit, X, they all scream the same thing. Buy the dip, wait for the pullback. But while they are waiting for dips, I'm buying all-time highs and making money like crazy. Look at this chart on the screen. Most investors see danger when prices hit new highs. Smart investors see the beginning of something extraordinary. By the end of this video, you'll understand why buying at the peak isn't crazy. It's calculated genius. Here's exactly what you'll learn in the next 20 minutes. First, why your fear of buying high while everyone shouts buy the dip is costing you hundreds of thousands of euros. Second, a detailed analysis of a strategy that generated 1600% returns. Third, a step-by-step implementation guide you can start using tomorrow. And finally, how to manage risk while everyone else panics. But first, let me share something that will flip your perspective completely. Every single massive winner in stock market history spent most of its time at all-time highs. Apple hit over 100 new peaks before reaching $1 trillion. Amazon broke records 197 times on its journey. Tesla hit all-time highs 73 times in 2020 alone. You know what these stocks didn't do? They didn't give you nice convenient dips to buy. They just kept going higher while dip buyers waited on the sidelines. The pattern is clear. Stocks at new highs tend to go higher. Yet most investors do the opposite of what works. And today, we fix that using the real European market data. Let's start with the strategy that could have made you wealthy. We backtested investing 100 euros every single time the QQQ3 ETF hit all-time high in euro terms since December 2012. QQQ3 is a 3x leverage Nasdaq tracker listed on Borsa Italiana in Milan. That means when the Nasdaq goes up 1%, this ETF goes up 3%. High risk, high reward. Perfect for our analysis. Here's what happened. Starting price in December 2012, 3.70 euros. Current price, 211.83 euros. That's a 57-fold increase. But here's where it gets incredible. If you had invested 100 euros at every new all-time high, you would have made 188 purchases totaling 18,800 euros. The value today would be 323,683 euros. Let that sink in. While everyone was screaming, buy the dip and waiting for pullbacks, this simple all-time high strategy turned 18,800 into 323,000. That's a profit of 4,000 euros, a return of 1,622%. The annualized return, 25.4%. You would beat Warren Buffett for over 12 years straight. This isn't some theoretical calculation. We used actual trading prices from European exchanges accounting for currency conversions. Technical deep dive. Now let's examine exactly how the strategy works and why buying the dip is overrated. The mechanics are surprisingly simple. Every day, you check if QQQ3 closed at a new all-time high in euros. If yes, you invest 100 euros. No waiting for dips, no timing the market, no listening to the crowd screaming about buying pullbacks. Pure systematic execution. Look at the year-by-year breakdown on the screen. 2013 saw 61 all-time highs. That's 61 buying opportunities worth 6,100 euros invested. The average purchase price that year was just 6.17 euros. You know what the dip buyers were doing? Waiting for it to drop back to 4 euros. It never did. They missed a 10x move waiting for a 20% dip. But notice 2016, 18 and 19. Zero all-time highs for 3 straight years. This is crucial. The strategy naturally invests more during strong trends and nothing during bear markets or consolidations. 2021 was explosive with 47 new highs as tech stocks soared. Your average purchase price that year? 253 euros. Everyone said it was too expensive. The dip buyers were waiting for 150 euros. They are still waiting. The leverage factor amplifies everything. During the 2024 bear market, QQQ3 crashed 77%. Finally, the dip buyers got their wish. But guess what? Most were too scared to buy. They wanted an even bigger dip. The highest price paid, 264 euros in December 24. Just weeks later, the ETF hits its all-time peak of 267 euros 50 cents. Even buying near the absolute top still worked within the broader strategy. Why does this work while buying the dip fails? Because all-time highs cluster together. Strong trends persist. Dips in strong stocks are rare and shallow. By the time you get your perfect dip, the opportunity is gone. Implementation guide. Let me show you exactly how to implement this strategy starting tomorrow for European investors. First, choose your investment vehicle. QQQ3 trades on Borsa Italiana with the ticker QQQ3. You can also access it through Paris or other European exchanges. The ISIN is this, so you can write that down or take a screenshot. For moderate risk, consider regular Nasdaq ETFs without leverage. For conservative approaches, use broad European or global index fund. The principle works across all trending assets. European investors have it easy. I personally use Freedom24 for accessing both European and US markets. Link in the description below. Since QQQ3 trades in euros on European exchanges, there is no currency conversion needed. You buy directly in euros, making the whole process seamless. Set up your monitoring system. Most brokers offer free price alerts. When QQQ3 hits a new all-time high, you get notified instantly. TradingView also provides free alerts if you prefer external monitoring. Now, here's the hardest part: ignoring the noise. Every time you buy at an all-time high, someone will tell you you're crazy. They'll say that wait for the dip and so on and so on. They'll share charts showing potential pullbacks levels and so on. Delete and ignore. Just execute your plan. Here's the beauty of the strategy. You can only buy full shares, not fractional ones. So instead of investing exactly 100 euros each time, you simply buy one share at every all-time high. With QQQ3 currently at 211 euros, and if you have 20 or 30,000 euros to invest, you can execute this strategy perfectly. One share per all-time high. Simple, clean, and massively effective. Think about it. 30,000 euros gives you enough capital for over 140 purchases at the current prices, even if it was 100 purchases. Based on historical data, that's several years of all-time high opportunities. As the price rises, you'll buy fewer shares with the same capital, naturally reducing exposure as valuations increase. Here's the disclaimer. Never put more than 10% of your total portfolio into leveraged products. This isn't your retirement fund. It's your growth accelerator. Keep 6 months of expenses in cash as your safety net and execute mechanically. Alert triggers, you buy one share. Market order at the open the next day. No analyzing, no waiting for a pullback. The data proves that hesitation costs money. Now let's talk common mistakes to avoid. Trying to time a better entry, selling during corrections because you bought the high, listening to dip buyers who missed the entire move, and abandoning the strategy during the inevitable bear markets. Track everything in a spreadsheet. Date, price, shares purchased, running total. When your deep buying friends show their returns, you'll have the data to prove why buying highs beats buying the dips. Future outlook. Where do we go from here? Let me share why the strategy is perfectly positioned while everyone waits for the next crash. QQQ3 currently trades at 211 euros, down 20% from its February peak. The dip buyers are getting excited, but here's the thing. We don't care about dips. We care about the next all-time high. When QQQ3 breaks above 267 euros, that's when we strike. Not before, not on the way up, at the exact moment of maximum strength when everyone else is selling. We are in a technological supercycle. Artificial intelligence is transforming every industry. The Nasdaq 100 holds the companies leading this revolution. When the next leg up begins, we'll be buying every new high while others wait for the pullback that never comes. Looking at the data, major bull runs produce 30 to 60 all-time highs per year. If we enter another tech boom like 2013 or 2021, you could deploy 3,000 to 6,000 euros annually with massive upside potential. But this strategy works beyond just QQQ3, applied to sector leaders, country ETFs, even cryptocurrency. Bitcoin hit hundreds of all-time highs on its way from $1 to 60,000. The dip buyers caught maybe 5% of that move. The key is starting before the moves happen. Right now, with QQQ3 below its peak, you are perfectly positioned. When the new highs arrive, you'll be ready while the dip buyers scramble to catch up. And also consider these advanced variations. Scale your investment size based on volatility. Use a percentage of portfolio instead of fixed euros or combine multiple assets for diversification. Some will say leveraged ETFs too dangerous. Some will say you should wait for dips. Show them the data. 1600% returns over 12 years buying only at all-time highs. Yes, there were 77% drawdowns. But those who stayed disciplined turned 18,000 into over 300,000. The future belongs to investors who embrace calculated risk, who buy strength instead of weakness, who use data instead of popular opinion. Remember, new all-time highs signal strength, not weakness. Dips signal uncertainty. Which would you rather buy? Now let's address the elephant in the room, the risk management. This strategy isn't without dangers, and you need to understand them completely. Leveraged ETFs can destroy wealth fast. QQQ3 fell 77% in 2022. If the Nasdaq drops 35%, this ETF could lose 90%. That's not a typo, 90%. The dip buyers loved this, finally their moment. But most were too paralyzed to act. They wanted an even bigger dip. This is why mechanical strategies beat emotional decisions. Daily rebalancing creates decay in sideways market. Even if the Nasdaq ends flat over 6 months, QQQ3 could lose 20 to 30% from volatility alone. Liquidity matters too. During panic selling, spreads widen dramatically. You might face 5% slippage trying to exit positions. That's why this is a long-term strategy, not a trading system. Position sizing saves portfolios. Maximum 10% in leveraged products. Maximum 2% per purchase. Never invest money needed within 5 years. This is speculation with a statistical edge, not investing. Prepare psychologically for the drawdowns. Watching 300,000 become 100,000 tests everyone. The dip buyers will mock you. They'll say they told you so. But the data shows patience pays. Every crash in QQQ3 history was followed by new highs. Consider hedging during extreme valuations. When everyone's euphoric and prices go parabolic, Buying some put options or reducing position size protects your gains. We've covered massive ground today. You saw the exact mechanics of strategies that turned 18,800 into 323,000. You have a complete implementation guide to start immediately. This isn't theoretical. We used real euro prices from European exchanges. We accounted for currency effects. We included the brutal bear markets. The strategy still delivered 25% annual returns. The choice is yours. Keep waiting for perfect dips like everyone else, or start systematically buying strength and riding major trends higher. Stop listening to the horrors of buy the dip. Start buying all-time highs. The data doesn't lie. Strength leads to more strength. If this video opened your eyes, hit the like button right now. Subscribe and ring the notification bell so you don't miss the next breakthrough strategy. Check out Freedom24 in the description if you need a broker that gives you access to these opportunities. And remember, everyone shouts buy the dip, but most money is made just adding and holding through all-time highs. Fortune favors the bold. Data favors the discipline. Combine both and unstoppable wealth will follow. This is Psycho Investor. Stop following the crowd, start following the trends, and always, always bet on strength. See you in the next video.